Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. In this video, we will try to create the trading plan, prepare for Monday trading session, because the major points of this plan we already discussed. This has happened on Friday and Thursday. As we talked about this in our video yesterday on euro currency, there are some additional cross-market bullish moments. For example, on the dollar index that we have mentioned, we have some bullish pattern that suggests, bullish for the euro and bearish for the dollar index, suggesting some weakness in the dollar that supports the euro currency and probably for gold. Besides, we have prepared as usual weekly report, fundamental report on the gold market, where we have considered few interesting driving factors that are not publicly announced, or just they were not given a lot of room for discussion in the media. In one or other way, they are just passed unsigned. But by our view, they are extremely important. For example, results of the Japan elections that is taking part today. And this particularly might make impact on the gold market in the coming week as well. But all these issues are mostly supportive for the gold. So on the weekly chart, the bullish pattern that we discussed already for a few weeks now is becoming absolutely evident. So you can see the pennant pattern on top, it's always bullish. Here we also see signs of the bullish dynamic pressure, because MACD indicator points to the downside while market is forming high lows. This is always the sign of the bullish dynamic pressure, and it suggests taking out of the stop at some moment. Second is minor detail, but might be important for intraday trading. Take a look at the recent 2 weeks here and here. Any attempt to go lower in both weeks immediately were bought out by the traders. So market was closed right near the top both weeks. It means that investors are watching for any dip and trying to use it for position taking. That's important. Now, speaking about some practical issues, you can see that the grabber that we discussed recently stands in place. The same grabber you could find on October futures of the gold on the Chicago Mercantile Exchange. So this is correct pattern. I would say more that this pattern on October futures is also the grabber. So on the spot market, you can't see it, at least on the FSCM that I have here. But on the futures, it's also the grabber. So it means that our strategy here stands the same. We are watching for a taking long position with a minimum target above this area, but we really hope that grabber will be just the trigger for possible upper continuation and later breakout of the weekly triangle consolidation. Very often, upside breakouts of the triangles is finished by the appearing of the butterflies, which shows the target around 36. That in general our midterm plans. But first it's first, we have to get the position, and later gold market should keep bullish context valid, do not dropping below the lows that we have specified. On the phone time frame chart, you could see that inside of this range, this fake rumors on the Powell resigning, also everything goes well. 4-hour time frame chart right now shows the bullish trend. On Friday, we've got here's bullish reversal candle. And now we have this upper performance as we suggested in our video, as prepared on Friday. So actually here we have the same minimum target as the target of the grabber. It suggests moving back to the 33.75 area. And that's what we will be busy with on the Monday. So the problem is where to better to consider position taking. So I see two possible ways how to act. First is you could try and take position right here if market will not go too far from the Monday open when you will take a look at the charts. If it will still around this point, that might be decision be made to position taking here, just because we have here a confidence support. So if you plot here the fib level from these lows to the top, you also will see here the 618 support area. So we could say that an area around 33.40, 33.45 is a confluence. So you could use it for protection, stop placement. But now you can see that market has completed the harmonic swing here. At the same time, the OP target of this ABCD pattern stands very close. It's around 33.64. So chances that the market will keep going higher right from here are not really bad. That's the first scenario. Another scenario, maybe it's more conservative. Since we have the reverse head and shoulders on top, you could wait when the market will start forming the right arm. The question here is where will be the neckline. So how far the upward direction will go before retracement will start. So thinking logically, since we have the grabber with this target, it might happen that upward direction will be right to the 33.75, 33.78 before any reaction starts. That's also possible. So this scenario, although it is safer, it is based on a clear pattern, but also it has some degree of uncertainty because you don't know whether neckline will be, whether the market will start downward direction at all. Because when you're dealing with the hand shoulders, very often happens that market could just directly break the neckline and keep going higher with upward acceleration. So that's also might happen. So from these charts currently, we can't say something more definite. So it's only this one. That's why you will have to make your own decision how better to act, particularly to you, based on your personality, mentality, some maybe trading habits, and so on. So that's probably all for now. See you on Tuesday.